Hello, hello, hello. Happy Monday. I hope everyone had a great weekend. I know my weekend was pretty decent. So I'm just gonna, just small talk for a bit to kind of give some of you guys a chance to pop in. Today, we're going to talk about the topic that we're going to be having today is common tax mistakes coaches and consultants make that can cost you to pay higher amounts of taxes. So before we get into the topic, I'm just going to reintroduce myself. So, my name is Shane Harris, also known as Shane the Negotiator, and I help coaches, consultants, and service providers to scale beyond 6 and 7 figures using legal tax and accounting strategies. So, as I said, today we're going to talk about those common mistakes that you guys make that can cost you big, big, big amount of money in your tax, in when you file your taxes. So we'll just jump on in. So coaches and consultants often make costly mistakes when it comes to taxes, but not all of you are aware of the potential pitfalls. So today we'll cover common tax mistakes that can cost you extra money so you can be better prepared for filing your taxes. So the first up is overpaying or underpaying on estimated taxes. When paying quarterly estimated taxes, many of you tend to overestimate or understate your income for the year. So this can leave you with a huge surprise when come time to file your taxes when you end up paying more than you anticipated or less than you expected. Now, I know for sure you will not be upset if you end up paying less, but generally, when you have to pay more, that is usually pretty disappointing. And unfortunately, for some of you, you're not always doing the best when it comes to budgeting. So, gathering up that lump sum of monies to pay those estimated taxes is usually not a task that you want to do all at once. So, another common mistake is not taking advantage of your deductions. Many of you forget to take additional write offs when filing your taxes, leading you to having to pay overall higher payments or more payments. Common deductions like your home office expense, your travel costs, and even retirement savings should not be overlooked. These areas are becoming way more beneficial to you, or they would be more beneficial to you if you start implementing tax planning throughout the year. So, I'm going to talk a little bit about some of those deductions. Some of those deductions are the home office expense. We'll start with that one. So, what the home office expense is, if you have a business and you're working from home, you're operating it from your home. So, this is we're mostly virtual these days. Many of you coaches and consultants are. So, you are working out of an office space in your home or an area that you designate as your office space. You may have a co working space or an office space outside of the home, but at part of the times you're probably still working from home, you can take that home office deduction. So, what that is that if you are renting or if you have a mortgage, you own the home, you can take a percentage of the area used for your business for deduction as a deduction. Can't speak today. So just start putting some numbers in there to make it a little more simpler for this explanation. So let's just say you have a mortgage or you own a home and the total square footage of your home is 3,000 square foot. We're just using nice, round, easy numbers. And your area that you designate for your workspace and for your business, where you do all your transactions, do your phone calls, your client meetings, your Zoom calls, whatever in that space, that's considered your home office space. That space is about 300 square feet. So you're going to take that percentage. So 300 square feet of 3,000 square feet is roughly 10% of office space that you would be able to write off. So, for instance, let me give an example. Say your total rent or mortgage is $20,000 for the year because you live in New York or Seattle or California, LA or not Los Angeles, LA or Malibu or something like that, where your rent is extremely high or your mortgage is high. $20,000 a year is expected. So 10% of that would be $2,000. So you would be able to take a deduction of $2,000. So you've been personally spending from your personal funds to pay your rent and pay your mortgage because your business probably did not purchase this property, which if it did, that's a whole nother conversation for another time, just not today. So that 20,000, you take that 2,000, and that 2,000 you would then take as a deduction. So let's say now we would add your other utilities. So if you have your phone bill that you're paying for, even if you have a cell phone or you're having a landline and it's designated for your business, then you can take a deduction for that. So you would add up the total cost for that. Now, if you're also doing not utilities, if you're having, I'm drawing a blank today. If you have Wi-Fi, like you're using the internet. Now, if you have the combination of the internet and cable, now you're going to have to do some calculations to figure out which part is for internet only, because if your business doesn't have anything to do with why you would need cable, then you wouldn't be able to take that as a home office expense. So I know a lot of times the cable companies or the internet companies, they're doing the packaging. So you would have to separate the two. If not, and it's already separated, then you just do the internet. So you would add up the total for your rent, for your utilities. So let's just say your water bill is $1,500 for the year. You would take 10% of that, and that's $150. You'll be able to deduct. So you already got the 2,000 for your rent or your mortgage, and now you have the $150 for your electric bill. You do the same thing for your phone, for the Wi-Fi, the internet, the water bill, whatever other type of bill you have. And you take those, you can write that down and you give that to your professional for you to be able to take those deduction. Those travel costs. So if you are taking trips to go meet with clients, because most of you might be virtual, but a good bit of you may still be seeing clients in person. So you may be traveling to them, or if you're taking trips to go to conferences and things like that, those travel costs. So your airfare, like I said, the Uber, the Lyft, or your personal transportation costs that's associated with the business, that's all a part of travel costs. And your retirement savings, so many of you are not aware that you can be able to get a retirement plan for your business. So you can be LLC, you can be a S corporation, a partnership, it doesn't matter. You can be making $50,000 a year or $5 million a year. You're still eligible to be able to get retirement plans, even if it's not 50,000 and it's less than that, and you're netting 10K or 5K, you're still eligible to have those retirement plans. And I say net and not gross because that matters. And we'll talk about that a little bit more at another time also. So you guys got to keep coming back so you can hear more tips, because gross and net is different when it comes to what you're reporting as your income, what your business actually made versus actually what's going to be taxable. The net is taxable, not necessarily the gross, because the gross we're going to be doing all the subtractions from. Tracking so far? Okay. So yes, so the retirement, the travel costs, and the home office expense, those are the common big deductions that you guys tend to miss because you're not really aware of or you don't understand how it works. So like I mentioned, tax planning throughout the year would be a better option for you because it helps you to plan better. I'm probably not speaking best English today. It helps you to plan every quarter throughout the year so that you are not having any surprises when it's time to file your taxes, and you're overall being on top of your business. Another way coaches and consultants may lose out is by not keeping good records of their income throughout the year. Now, we talk extensively about this topic. You hear other tax professionals, you hear myself. We're always beating this horse with a stick, talking about record keeping because it's very, very important. The record keeping allows for accurate income tracking. It's key to getting an accurate picture of your taxes owed. Keeping track of all payments, all deductions, and other pertinent information can help you avoid any unpleasant surprises when it is time to file your taxes. So some type of record keeping system would be best, like, QuickBooks, Zero, Wave, or, you're using Excel sheet or whatnot, which ideally is best to get some type of record keeping system in place so that it's easier to have for tracking purposes. You can have a digital version of it, or you can have a downloaded version of it on your computer, or digital version in the cloud. That's what I meant, or something of the sort. And there's so many out there. There's some that can be if you're barely getting started in your business and you're not really making a whole lot yet. You're not having a lot of transactions, and you're probably making like less than $5,000 a year. Then you can use a platform called Stride. Stride. I almost forgot it, the name of it, Stride. So Stride is a free one, and you can track your income and expenses. Of course, if you start making over $5,000, or you're getting constant transactions, and clients are paying you, all these, you're paying you a lot of money, and you're starting to go over that $5,000 threshold, I would say is definitely time to start upgrading to some of the other softwares. And one of the ones that I know that I use quite often and I recommend to you guys is QuickBooks. So moving on along to the next one. So finally, be sure to keep up with the ever-changing tax laws and regulations. So tax codes are constantly being updated. So it is very important to stay informed and adjust accordingly. Now, I don't know why you would want to add more to your plate by having to research new tax codes when you can just leave it to me. So I know, particularly in 2020, when we were in the height of the pandemic, when that year ended and we started 2021, there were so many updates to the tax codes. It was almost overwhelming for even us as the professionals. So imagine you that have no deep rooted information in taxation, how difficult it probably was for you at that time, because we were pulling our hairs out. I know you would probably be going crazy also. So keeping up with those tax codes, you can go to the IRS websites and stay abreast of the codes if that's what you want to do. Why? I don't know, because if that was in my area of expertise, I wouldn't be investing my time into it. I would leave it to someone else who can, so that I can focus on what's important to me, which is growing my business. So keeping up with those tax codes really help you to minimize your taxes, which you're probably like, how does, keeping up with tax code help me to minimize my taxes? Well, it does, because if you know the new deductions, the new credits, and the new rules that's available to you as business owners, then you can make adjustments with that tax planning that I keep talking about, so that you have a better idea of what you're going to do and how you're going to scale your business, how you're going to put away for taxes, how much you need to invest into those retirement plans. And the list is endless. It's so many different things that I can list out that can be beneficial when it comes to that tax planning. So keeping up with the laws can help you with all of that. Or if you don't want to have to keep up with all those laws, because why should you, then you definitely reach out to a professional, i.e. me, to get that taken care of for you, so that you can be aware. You can also get on my email list, because I send out, and check out my blog. So it's profitfirst.com/blog, and you can get updated information there. And if you're on the email list, then you get emails sent to you during tax season. You get more emails sent with updates on the changes in the laws and any tips that I'm giving out to you, so that you can better grow your business. So coaches and consultants should consult a professional, like I said, myself, or visit the IRS website for more information on changes that may affect your business. So by avoiding these common mistakes, you as coaches and consultants can ensure that you pay the proper amount of taxes, minimizing your tax debt and any type of financial burden. Knowing the potential pitfalls, preparing in advance will save you time, money, and stress in the long run. Now, if you need assistance with tax preparation, bookkeeping, payroll, or any advice on deductions, reach out today. We're here to help you make the best financial decisions for your business. So click the link to get started. Thank you for tuning in. I hope this has helped inform the coaches and consultants about the potential tax mistakes that you are making and how to avoid them. Stay tuned for more tips, savings, and money increase. Stay tuned for more tips, savings, saving money, and increasing efficiency when filing your taxes. So happy filing and have a great day.